Hey, it's Mark Ferguson with Investor More, and I'm back with another real estate video. Today, we're going to take a look at the current market conditions in the U.S. and Colorado. So I'm a local broker in Colorado. I have access to all kinds of great data for our state on sales and listings, and there's all kinds of other information out there on the national market as well, which I'll be talking about. So I've talked a lot about the market the last few years, and there's a lot of people out there saying our market's already crashing. It's just going to be horrible next few years. And I want to look at the data and show you what the current trends are doing locally and nationally, and kind of talk about a few of the misconceptions about the market as well. And I'll also talk about some of the properties we have for sale, how our personal flips and rentals are doing as well in this current market. All right, we love the likes, love the shares, love the comments. Keep those coming. And let's take a look at some data right now. Okay, so one of the favorite things for me to look at is Realtor.com's research, and every month they publish a report that we can see some really cool charts and data. So one thing I keep hearing over and over again is prices are dropping, price cuts are, the amount of properties having price cuts is increasing significantly, inventory is going up, and because interest rates keep going up, the housing market has to crash. Now I've had lots and lots of videos about interest rates in the housing market. And even though it doesn't make sense on the surface, historically, whenever interest rates have gone up significantly, housing prices have not dropped. They might drop for just a little bit at the shock of what's going on, but then they keep going back up. And that's primarily because interest rates usually go up when there's a lot of inflation going on. And inflation makes the cost of everything go up. And it just seems off to me that people think, well, the cost of everything can go up except for housing, right? That one has to go down. But really, the cost of everything goes up when inflation is high. Rent goes up faster, and housing prices have had their highest appreciating decades with the highest inflation. The 1940s and the 1970s had the highest inflation in the last 100 years. They had the highest appreciating market in real estate in the last 100 years as well. Now, I'm not saying that that's going to happen again. It's really hard to predict what will happen. Just because it happened in the past doesn't mean it will happen now. But that can give us some insights and maybe some ideas on what might happen in the future, and not just automatically say high rates mean prices will drop. And the real thing to consider is people look at demand and say high rates make less people be able to afford houses. So that has to mean prices drop. But you're only looking at demand. You're not looking at supply. When you're looking at prices, it's supply and demand. And when interest rates go up, supply often decreases, and we're already in a very low inventory environment. And we're seeing that now, and we'll show you that data and talk about why that's happening. All right. Like I said, this is the August monthly housing report, and these are the charts I really, really like. They're so cool. And so here we can see the active listing count. And the really cool thing about this, too, is it has data from the last 5 years, not just comparing this year to last year. And that's another pet peeve of mine, where I see people compare this year to 2021. And 2021 was like an albatross, crazy real estate year. That was not a normal real estate market. Normal real estate markets were pretty much before COVID, right? And even those markets were increasing and doing fairly well. So with this data, you can see 2017, this is the number of houses currently for sale in the country. You had 1.2 million houses going up to 1.4 million. And look at all these years are fairly consistent. And you can also see a fairly consistent seasonal trend, right? They're lower at the start of the year. They increase in spring because people typically think, oh, the best time to sell a house in spring, that's when I'll list my house. During the summer, you have more listings. And then as the holidays, fall comes around, those listings typically drop. And we see that over and over most years, except for COVID, right? The COVID year where things just dropped significantly. People decide not to move. They didn't want to be exposed to different things, or they didn't know what the market would do. Saw a massive drop. And then in 2021, we saw kind of the same trend, right? Almost the exact same trend, except listings were higher in February, and they kept dropping. Except you can see there was like 50% of the listings or less than normal. And that's why the real estate market was so crazy in 2021. And so what we're seeing in 2022 is that even lower, record low inventory at the start of this year. It was insanely low. And then we got to see this increase when rates started going up. And people are saying, look at this, the market's going to crash, listings are going up, inventory is going up. We're still less than half of a normal market right now for listings. And yes, they were going up, which, as you can see, typically happens every year anyway, but it was going up at a higher rate. But they've leveled off, right? It has leveled off, even with rates continuing to go up. The amount of new listings, or active listings, I should say, has leveled off, just like, real similar to those trends. And then we'll see what happens here the next couple of months. Now we go to some more charts. Total listing count. So this kind of includes all the properties under contract, not just active. So I should be clear. Active is currently for sale. You can go buy it. Total listing count is everything for sale, including houses already under contract. If they're under contract, that means Joe and Susie saw a house, they liked it, they wrote an offer on it, the sellers accepted that offer, they're working on going through the process of closing that deal. But another buyer can't come along and buy that house unless that contract falls apart. So these are total listings, including under contract listings. And you can see here, kind of the same chart, except it didn't increase as much, right? We saw really similar to this, and just slightly more total listings than even 2021. And so this increased more, which we'll show you in a little bit, means there's about the same amount of listings, there's just less of them under contract. So there are fewer buyers, which makes sense with interest rates going up. Now, we go to the pending listing count, and that's houses under contract people are wanting to buy. And here you can see very similar chart as the others, and then it starts decreasing, maybe slightly more than the other years, but really similar, right, on that chart. It's not like there's this massive change from the other charts. And that's kind of like, well, that's what happens this time of year, especially in the fall. And I see that with my business every year. The fall is very slow for real estate. People are going back to school. There's lots of changes. They don't want to buy houses in the fall. A lot of people think winter is like the worst time to sell a house around the holidays. I actually like winter and the holidays a lot more when selling houses than the fall. The fall is just the worst, for me at least. And we look at this compared to other years. This is 2022. 2021 is green, and we had way more houses under contract, so more houses were actually selling. 2020 is blue. So what we saw in 2020 and 2021, more people decided to buy houses, right? More people went out there and bought houses that had way more under contract and selling, which was interesting, which is what helped cause the record low inventory, as well as other factors. But look at this. Even though it feels like, oh, there aren't that many houses selling, there's no buyers, nobody's doing anything in this market, there's still way more houses under contract than these so-called normal years, or the years before COVID. The market is not dying or dead. There's still more houses under contract or going to sell than those years. But there's way less in the last 2 years, which were just kind of albatross crazy years. And this just kind of goes back to my theory that we're not going to see a crash. We're not going to see crazy drops in prices. We're going to go back to a normal market. And a normal market is where you don't have 50,000 over asking price offers. You don't have 15 offers on a house. You can't just expect your house to sell on the first day. It might take a few weeks to actually sell a house, which is how it's been pretty much in the history of real estate, except for the last 2 years. There were some multiple offers, some craziness going on after the real estate crash, but a lot of that happened because prices were just way too low. Banks were pricing them too low. A house that should be worth $200,000 was priced for $150,000. So naturally, people are going to offer more. But this last couple years was kind of crazy, especially the last part of 2021 and the first part of 2022. All right, newly listed homes. This is something that is very important, and to my point, and to what I think might happen. I'll drop that down just in case my picture is covering that. Newly listed homes. So these are houses that are being put on the market as new listings. And we can see historically, all of these are very similar charts, except for 2020, which like COVID hit, everyone stopped listing homes, and then it kind of got back to normal as the world slowly got back to normal. And here you can see, even starting in January, we had kind of less newly listed homes than other years, except for last year, 2021. And then while these other years, except for 2021 and 2020, which were weird, they started to go down in May. So we started to see a decrease, while these years kept seeing a decrease. And what we saw in 2022 was when there was usually a decrease, we saw an increase in newly listed homes. And I think that was kind of the interest rate shock, where people thought, oh my gosh, rates are going to go crazy, the market's going to crash, I need to list my home now and sell it before that happens. So we saw more houses listed instead of fewer. But again, we're not even above any year. We're above 2021, above 2022, slightly above 2017, slightly above 2018. We're not even in 2019 territory. So there weren't more homes being listed than most years. It's about average. And then once June hit, look at this drop. And you can see other ones had a drop too. But look at this. It dropped to the lowest amount in the last 5 years of newly listed homes for this time of year. And that is something that I've said for a while now. When you look at demand, buyer demand drops with high rates, but supply usually drops too. And why is that? It's because people who own a house already, and especially the last few years, they got a 2 or 3% interest rate, and they say, oh, I'm going to go move up. I'm going to buy a better house. I don't like this house. Let's buy something new. And then they look at the market and they say, wow, interest rates are 6% now. I can't buy a bigger house. I have to buy a smaller house if I move because it's more expensive. Or, you know, that's a really cool house, but I don't want to pay a 6% interest rate and double my payment right now. That's not something I want to do. I'm going to wait. And people stop selling their houses, which is what we saw. Look at this, a bigger increase in sales in any other year, massive drops in people listing their homes right now. Now there's still a slight increase in total listings, but this is a trend that I think we're going to continue to see, because the higher rates go, the less people are going to want to sell their houses. They're not going to want to sell them and put them on the market, which just shrinks demand and supply at the same time. And you kind of need to have that like out of balance one way or the other to see big real estate changes. You know, really low demand, really high supply like we had in the housing crash before, that caused prices to drop. Really high demand, really low supply, that caused prices to really drop, to really go up. But if they're in balance, you see more of a normal real estate market, even with higher rates. And we kind of saw before with the pending chart, people are still buying houses even with rates higher. All right, days on the market. This is an interesting one too. You can see the normal kind of chart. Again, 2020 was weird. 2021, a complete albatross on how fast it was to sell houses. And then 2022 has gone up. As you can see, in most years it goes up this time of year as well. But again, nothing crazy. We're just barely above 2021 with its record low days on market. And we're still maybe not quite half, but like a third lower than a regular year. Even 2020, we're not even close to days on market exceeding what those years were. And those were pretty good years for real estate. Those weren't bad years. Those weren't down years. These were fairly low days on the market as well, historically. This has to really jump up before you kind of start to get worried about the real estate market and prices really plummeting. All right, now we get into median listing price. And this is where some people are saying prices are crashing, market's already crashed, it's going to get horrible. And you can see here, historically, right, prices keep going up and up and up every year. And you see kind of a rise. And then it's kind of funny, the trends you see, prices really jump in the start of the year. And then they start to kind of level off in summer. And then almost every year, look at this, they drop, not at a lot, but they drop at the end of the year, right? Real estate doesn't just keep going up at this steady pace. It kind of like is more, you know, if we look at some of my other charts here I'll show in Colorado, it's more zigzaggy up. And sometimes, yes, it drops and then goes back up. And it's very hard to say after 1 month or 2 months, oh, the market has crashed. Because in other years, even 2021, it went down as well. And then we saw what happened after that. Skyrocketed at the start of the year. And so if we even look at just, 2 months ago, we're still at the same prices. Yes, they rose a little bit higher here in the summer. as they do in most years. Now, did it rise higher than it should have? Maybe. Maybe we're kind of regressing back to a more normal line here. If it had kind of started here and gone normal like that, we're still above that line from the other years. Now, that's not good for people who happen to just buy in this summer, but that doesn't necessarily mean every single person who bought the last 2 years is completely screwed. And it doesn't mean we won't go back up either, which we've done the start of every other year. Will that happen? We don't know for sure. I'm not guaranteeing prices will go up, but I don't think they're just going to keep plunging. I think we'll see a similar chart as these have in the last few years. I know some people think I'm crazy when I say that, but again, I could be wrong, but that's just what my gut tells me and the data tells me as well. All right, here's another interesting chart. Price reduced share. That's the one we hear all the time. There's record numbers of price reduced properties. It's jumped up significantly. That shows the market crashed. Well, I like to look at prices themselves more than price reduced share. But here we can see data. Again, 2021, really low amount of price reduced. 2020, the same thing. Here are our normal markets. And even in 2022, we had record numbers of price reduced shares, and it jumped up. What did it jump up to? More of a normal market. Yes, we have way more price reduced properties than last year in 2020. Right about the same as 17, 18, 19. Right about the same. And you saw this massive jump, and maybe we'd be worried if it kept going up all the way up here. But look, it leveled off. And look, these years jumped as well too then. This jumped more, obviously, but again, going back to normal market, we had to jump higher. But again, it's not anything crazy or scary. It's right in where it has been. Now, let's see, do we have any more? I think that's all the charts. So, overall, have prices decreased? Yes, a little bit. Has days on market gone up? Yes, a tiny bit. Have listings increased significantly? Not really. In fact, new listings are down significantly, and something else that we didn't see here, which I'll show you in a different chart, are new builds and what's happening in new construction. All right, so here we are on the Fred, St. Louis Fed Economic Data Site, amazing site with lots of information, most of it from the US Census. And this is new privately owned housing starts, total units. So this is apartments, condos, houses, all of that. And you can see historically what has happened. And the 70s were crazy. 70s was such a weird decade with record inflation, record interest rates, record building, record house appreciation, 2 recessions, 2 oil crises. It just was that just shows we can never know what the real estate market will do for sure, because it did the opposite of what most people would have thought would have happened with everything going on in the 70s. But anyway, going back here, we saw massive amounts of building. The real estate crash happened, and then we've been slowly getting back to kind of normal. Maybe we were slightly above normal, but with record low building for so long, we needed that. And then we can shrink this chart up here more. I want to show you. This is more recently what has happened, and I'll shrink it even more here. So, January 2010, kind of the bottom of building. We're slowly getting back up to normal. Kind of a big boom before COVID, right? The economy was doing good, great, and then boom, COVID hit. Everybody stopped. They didn't know what was going on. Then we got back to normal, slowly rising again. Boom, interest rates hit, inflation hits. Builders say, hold on, we're not starting new houses. This is new housing starts, so new houses being started. We're going to slow way down, stop building as much, and see what happens. So this, along with sellers not selling, builders will stop building as much. And they're trying to sell their inventory fast too, because they don't know what's going to happen. Now, do they think it's going to crash? Maybe some do. But every time there's uncertainty, builders kind of stop building. And you also see there's lots and lots of up and downs here. It's not a steady chart either. And so, but if we see less building, that means even less inventory, and we could see prices. I'm not saying again, I don't think they're going to shoot up or go anything crazy, but with less inventory, it's really hard for a market to crash if there aren't enough houses for people who want to buy. And yes, demand's lower, but so is supply. Now, something else I like to look at too is this is single family homes. So this doesn't include apartments, duplexes, multifamily, things like that. This is just single family home starts. And you can see they built so many houses in 2005. That really gives a picture of how many houses they built for such a long period. and then it dropped like a rock. And we still, I mean, maybe that's close to normal, but again, the whole time the population's increasing, and people say, well, once you build enough houses, you don't need more. Well, they're constantly tearing down houses. Houses are being converted to commercial property. Houses are abandoned as some towns like Ohio, Detroit become less popular. Other places become more popular. So you always constantly need new houses. And some people simply like new houses instead of old houses, just like some people like new cars and not used cars. So here we can see single family homes going up. Not big increases though. Again, COVID dropped. Then we got kind of this explosion in building, still not even close to the peak. And then things really kind of slowed down. Interest rates jump up. Boom, a big drop again in single family homes, and maybe a slight increase here. And this slight increase is interesting because I wonder if that means builders are kind of like, oh, this market isn't crashing like we thought it would. It's not the end of the world. We're going to build a little more. I'm just speculating there purely. But if builders thought it was completely crashing, I feel like they would just completely stop building. And in August, they saw a little jump. So that's interesting. But again, this is whole to the point where if we have less building, we'll have less inventory, and it'll be tough for the market to crash if that happens. Okay, and here I am in my MLS data. So I'm a broker in Colorado. I have access to MLS data, and we can see what's happening in all of Colorado, my area, Denver. This is all of Colorado. So I had someone comment on one of my videos saying how the Denver market is crashing. And I want to take a peek at that because it's very interesting what's happening here. So this is the median sales price. Red is Denver, blue is the entire Colorado MLS. Although Colorado has multiple MLSs. We have Iris MLS, we have MetroList, we have Pikes Peak, some other ones. So this isn't all of Colorado, but just mostly the Front Range MLS might not have some of the southern cities like Colorado Springs and Pueblo. But you can see the blue line, how much stabler that is, just because it's more properties, it's a wider sample range, you'll have a more steady graph. Red is Denver. So Denver has 600,000 people. I haven't checked recently, but Denver's a relatively small city. There's lots of suburbs, towns around it, pretty sprawling, but the actual city of Denver itself isn't super huge. And so what you see is lots of spikes and different things going on. And so what someone had said is Denver's prices have dropped from $650 to $560, huge decrease showing a crash. And that's true, right? We can see right here, Denver median sales price in April was $650, dropped to $615, went back up to $635, dropped to $595, dropped to $560. That seems like a crash. That seems like the market is just going crazy. And you can see the entire MLS went from 600 to 585 to 558. So prices seem to be dropping significantly. But what you want to look at in the past is that, like I say this over again, you have to look at long-term trends with real estate, not a few months. Prices went down from December to January, from 550 to 529. And that was like a crazy hot time in the market. It's very, if there's a crash, that would not indicate it. From July 21 to January 22, 529, 566. Again, a drop, but that was a pretty crazy real estate market. And we can see October, it had a big drop here from 525 to 488. Again, the market must be crashing, right? But the really interesting thing is back in May of 19, before COVID hit, when we were in a relatively stable real estate market, look at the Denver prices. 451 in March, 382 in April, 497 in May, 426 in June, 340 in July. So we had a drop from 497 to 340 in July 19. Now, I don't know about anybody else. I do not remember this real estate crash happening in Denver. Maybe it did. But a few months later, it was, back to normal and things kept going up. And so what you have to look at with real estate is kind of like this blue line is more indicative of the market, not the red line. The red line, we take short sample sizes, small sample sizes, can be crazy. But if you drew a ruler through this and kind of looked at the trend, you can see what's happening. And when you saw this big jump right here, it decreased, it still didn't really decrease below this trend. And the same thing happened here, right? You had this trend going on, big jumps all over the place. And, a lot of that, maybe it's one, lots of big sales, a new subdivision opening. Maybe it's a small subdivision opening. Who knows what could be causing these? But it's very interesting. And this is attached and residential detached. If we switch to just detached, look at that craziness. In 1 month, it went from 630 to 343. It can really look crazy. You go from 575 to 742 for prices, and they've been fairly stable. Drop down to 655 from 758. Got to be a crash, but you're still the same price as a few months ago and way higher than the start of the year. So that's what I'm saying. And look at this trend. It keeps doing it up and down, up and down, up and down. We have to kind of see what happens for almost 6 months to a year, which I know is very frustrating. People say, I can't wait that long. I need to know what's happening now. But real estate does this over and over again, and people have been calling for crashes for the last 10 years, and you'll see similar articles and data saying the real estate market crashed. Look at prices go down. And then the next month they go back up again. So it's very tricky to say the market has crashed based on just a couple months of data. And that's what you see over and over again. Because the media, the news, social media likes to sensationalize things and sell stuff, and that's what sells stuff. So we'll see what happens long term. But that was interesting. And then if we look at my area, okay, Greeley versus the entire MLS. And then that's both property types. Okay, so Greeley is red. You can see pretty steady. We're kind of in line with total MLS more than Denver. I don't know if that's because they have fewer sales. I'm not sure. But you can see we're pretty steady. And we've had ups and downs along the years too. We had a little higher up in 2022. Steadied out. We can say, interest rates hit, prices had to go down, went down, boom, they went back up again in August, right? That's a weird market crash when prices went back up again. And I've talked to other agents who have said that too, where they kind of had this interest rate shock. Things went real quiet for a month or two. And then when people realized, the market's not crashing, prices aren't just dropping significantly, it picked up again and the buyers came back. So again, it's hard to say what will happen, but there isn't this crazy crash happening. And the other thing we can look at down here is so much cool stuff. We can look at new listing. Okay, I removed the entire MLS just to show Greeley because there are so many more properties in the entire MLS, we couldn't see this chart very well. So this is new listings, right? Historically, up, down, up, down, up, down. Pretty similar to almost every other year. There wasn't this just crazy massive increase. And they've actually been decreasing again, like they do most times this year. And possibly because of interest rates, who knows? Homes for sale. This has increased somewhat, as you can see, had more homes for sale than we've had in a while, but it's starting to level off and decrease again. Again, that's just, we've had similar new listings, but just not as many selling. But again, we might have less listings here now that people realize, I don't want to sell and get less of a house. Under contract, look at how little there were then. But you can see up, down, nothing crazy, right? This is very similar to what it has been historically. Closed sales, again, nothing crazy going on here. Very similar to before. Days on market was crazy low, went back up a bunch in February, then dropped back down to normal. Slight increase again here, but still not even close to what normal is. Months supply, that did jump up a little bit at 1.5. Right? I think a normal market is considered 6 months of supply. And you'll see some crazy different data on this too, where people say month supply is now 10, 11, 12 months. That's just for new houses. They're not including existing housing in that data. That's just new houses. New builds are tricky because it can take 6 to 12 months to build a house. They count it as on the market that whole time. The longer it takes to build a house, the higher the month supply gets. So that can be tricky. But I did see the last couple of months, month supply of new construction dropped as well too. And then we have sales price, which we just looked at. Was up, was down, back up again. Percent of listing prices is like how many offers above price. It's been real steady at 100, jumped up like crazy, jumped up again, back to normal again. Dollar volume, and this is an interesting one too. Price per square feet. So a lot of times median sales price tells us just the sales price of houses, but we don't know if bigger houses, smaller houses are selling. We don't see all that data. Price per square feet is really interesting because it tells us the price of houses based on their square footage. And you can see some up and down, but again, we're almost at the highest point we've ever been. Just 1 month was higher in May. And besides that, we're still at the highest price per square feet we've had historically, which would not indicate a crash to me. Shows depending, this is how many showings you have to get a house under contract. Nothing crazy. Shows per listing jumped up crazy in 2021 with our crazy market. Now we're back to what? Pretty much a normal market again. We're not seeing crazy stuff happen. Now, with my real estate market, with my properties, what have I seen? I have seen it take longer to get offers. I've seen the market slow down. I've seen fewer buyers, yes. And we kind of knew that would happen with interest rates going up. But we still have properties selling. We still have properties going under contract. And it's not like they're having to drop the price $100,000 to do it. It's very similar prices to what we saw at the start of the year, the end of last year, maybe not quite at the peak of like March and April, which is what our data shows us here too. And we're also seeing people can't just price their property crazy, $100,000 over what they think it's worth and hope they'll get an offer and sell it. You're having to price properties at what you think it should be, what the comps tell you it should sell for, what history has told you it should sell for in the last 6 months, not just a crazy amount because people have no choices and they have to pay whatever you want. So we are definitely returning to a more normal market. Now, what else is interesting is I'm still looking to buy properties, right? I still love to do flips. I still love to buy commercial properties, residential properties, multifamily for residential. I don't see any amazing deals coming on the market. We haven't bought a property for a while, and it's not because I'm worried about being able to sell it in the future. It's because there just haven't been that many great deals. There's been a couple, and we've either gotten beat out by other investors, or they're weird properties, or there just wasn't enough room in it for us to make money. And construction costs are way higher, carrying costs, taxes, all that go up. My personal borrowing costs haven't really gone up that much because of the financing I use. I use a lot of private money and different things. And so that wasn't really affected me much. But if the market was crashing and going crazy, I feel like there'd be a lot more deals out there. And I just don't see those deals. So maybe if we start seeing a whole lot more deals, maybe the market's crashing. But even then, I feel like there are a lot more deals in 19, 20, 18 than there are now. And we're still not back to that really normal real estate market yet. We might get there soon. All right, that's all I've got for this video and this update on our market, the local market, what's going on with me. Many more videos on my flips, rentals, businesses, all that cool stuff coming up here. So if you haven't subscribed, love to see new subscribers. Love it if you like our videos and love to hear comments on what you think as well. All right, thanks for watching. I'll be back soon.